Lyon Share Podcast with our host, Ed Lyon. Here we go, Ed. This is it. It's a happy new year to talk AI. I can't believe it. We're going closer and closer to the new year whenever this will air on so many different broadcast channels. But I came up with a topic. I feel that people think they're geniuses once they go into an AI chatbot. They think it's gospel.
AI makes them a genius. Everybody has it was bad enough when everybody put one of these in their pocket and you were arguing over sports with your buddies at BW3 watching a game, and now anyone can come up with the answer for any trivia. It eliminates arguments. But now people think that AI makes them even smarter.
So much smarter, and it's input output. But today we're going to do something where, okay, I'm going to be the guinea pig of typing into different large language models. That's an LLM, large language model. It's sometimes a bit a mouthful. But a large language model are different programs out there that are AI agents. And what their job is to be an assistant for you to answer questions and be the genius, be the expert. The problem is, it's whoever is running that large language model AI agent, their intelligence is going to have a lot to do with the answer to the question. If you don't give it prior knowledge, if you ask it cold, you're going to find out the advice is not very good, but it's going to act like it's the greatest advice since sliced bread.
Never, often wrong, never in doubt. AI has the confidence of, as they say, a mediocre white man.
I have had to the point, I'm so happy now it calls me out. That was a great thing because finally it's giving me realization when it tells some people that they have the next genius thing. If you listen to this one Podcast Diary CEO with an AI expert, he basically talked about some people went so crazy they think that they have the next theory, the next greatest scientific theory, and AI is saying, yes, you do. And so you never know. And so today we're going to take tax questions from Ed's audience, and we're going to ask a AI agent to answer the question.
I would also love to see what happens if we feed the same question into a couple of different AI agents.
Yeah. Okay. So if you're cool with that, we'll do that. I'm going to go with the free versions first. This is the other thing. If you don't invest in AI, you're investing in your free version's garbage. It's going to give you a little bit of a taste and then they're going to charge you. Or it's going to give you answer after answer, but you're getting a worse version of the product. The more money you spend in AI, the better your AI experience.
It's a tool that makes us more productive if we put the input in. My AI is trained. It knows to look for answers from the tax code. It knows to look for answers from major accounting firm and major law firm websites. It's not just going in cold and thinking, hey, we're going to spin something fun on the big, beautiful bill. There are tax versions of commercial AI. There's a tax GPT is what it's called, and it's trained. It's trained on all the tax material. Now, does it still hallucinate? I imagine it does. I would not do any research with AI without verifying it. AI is a starting point on research. But here's where it really becomes important for people who are listening to the podcast. Google and now AI have always been much better at answering specific questions than they have been at guidance for specific scenarios. So if you start with a fact, I'm a real estate agent and I'm netting $120,000 a year. I can ask Google or I can ask Gemini, how does an S corporation work? But they're going to be less effective for most users at saying S corporation would make sense for you if you weren't married, but you are married and here's something that changes it, or here are your rental property losses, blah, blah, blah. So you're going to find as you move from specific questions to broader planning, that's where I think we're going to find AI just doesn't keep up with someone who's looking at all of the different moving pieces.
It's so true. And I think that's the thing. And then also, if you think AI is improving your productivity, the big thing is now create an AI agent for any task. If it takes you more time to develop, it takes you 3 seconds to do that task, and you go and build it in AI yourself, and it takes you hours upon hours, you are wasting time and productivity. You might as well hire somebody to go and do the coding and do the work for you. So,
Sure.
okay, so
I'm not a coder. I very quickly came to terms with the limits of my ability to use AI as a tool. I read articles about you're setting up agents and clients and doing this and that and automating all of these routines. And my thought is that sounds great. I'm just not there yet. If I want to do that for myself, I'll need to bring in an expert.
and the thing is, it sometimes isn't going to be as good as the human being. So this is where what's the best thing. But let's just say today we're going to ask a bunch of large language models tax questions without giving them any information except the question. And let's see what comes out. We'll start with ChatGPT, OpenAI, a free version, not a paid version.
All right, so let's ask it. I'm a real estate agent netting $120,000 a year. How should I organize my business?
All right, netting 120. And I'm glad it's not mine. It would look at me and say, "You're not," because it knows me perfectly. I'm real netting 120,000 a year. How should I organize my business?
That's my business, yeah.
Oh, I like that. And while we do that, what is you said you like using Perplexity. That's your favorite?
No, I used Perplexity for a while as my default search engine. I actually use ChatGPT for more detailed tasks, but I like that Perplexity throws a bunch of sources right up front. And so that gives me the links I need to go into the sites myself. So Perplexity is more a place to go to find other links. ChatGPT is my workhorse, and I'm just now starting to use Gemini as well.
All right. So I'm going in right now and asking other questions to other people. And I just setting up these accounts because I have the paid accounts for most of them. I'm right now in Claude to ask the same question. Grok asked the same question. And also Meta.ai the same question. And it already came up with answers. So I'll read those to what Meta answered. And I'm going to go. And then what do they say as I'm looking at? So I'm trying to go through the prompts in the one for the other, but let's just go and see what the answer was from ChatGPT. Very interesting. Short answer, most commonly optimal 120K net for most real estate professionals at your income level, single member LLC taxed as an S corporation plus clean bookkeeping and separate business banking. This balances liability protection, tax savings, and simplicity. Step by step, how to organize it properly. Legal structure entity. Form an LLC if you don't already have one. And then basically registered in a home state, protects personal assets, then elect S Corp taxation with IRS. Why S Corporation 120? You avoid self-employment tax on part of your income. Right. You pay yourself a reasonable salary. Remaining profit is distributed tax-free. Example, salary $60,000, payroll taxes apply. Distribution $60,000, no self-employment tax. Potential savings $8,000 to $10,000 a year. You pay yourself correctly. If you have two streams of income, W-2 salary, reasonable for your work, role experience, and market. Owner distributions not subject to SE tax, taken periodically, monthly, quarterly. Too low salary, IRS audit risk. Too high salary, lost tax savings. Banking and financial separation, business checking account, business savings, business credit card. Rules, no personal expenses through business accounts, no mixing funds, pay yourself via payroll or distribution. This protects liability shield. Then we're bookkeeping and accounting. But what are your thoughts so far? I'm quite impressed with the basic.
That's a very good answer. I will say that in the first couple of sentences, it said real estate professional. Now, a real estate agent making $120,000 would obviously be considered a professional, but real estate professional is a specific term of art for someone who has made an election under Internal Revenue Code Section 469 to allow the passive losses from their rental activities to flow through against positive income from their business. So there's a little bit of shading there. The rest of it is good, solid advice. If a prospective client came to me and asked me that question, that's very similar to what I would say. I wouldn't use the term real estate professional, but that's giving good advice for a pretty basic question.
All right. As I'm plugging in the same question to another model, and that is Anthropic's Claude, let's see what Meta does. Because how many people are really using Meta?
I've never used it.
Okay, let's see if it answers the same question. And that's Llama 3.0, which is probably a different Llama now. So that's where they use as their engine is Llama. All right. With 120,000 yearly net income from real estate, it's essential to organize your business efficiently to maximize taxes and maximize profits. Here's some key considerations.
I would not say you want to maximize taxes.
Minimize. Sorry, I read it wrong. Minimize.
Okay.
Oh, you got me on that one. Minimize taxes, maximize profits. Business structure, LLC, S Corp, C Corporation. So they give you multiple different choices. They put C Corporation. Organization. What?
That's not the right answer.
Okay, see? Okay, so we're going to stop. Organization structure, sole agent, team structure, hybrid model, tax strategies, bonus depreciation, Section 179 deductions, 1031 exchanges, cost segregation.
All right, so let's talk here. First of all, the cost segregation and 1031 exchanges, those are for real estate that you own, not real estate that you broker. So we're bringing in completely inapplicable code sections. The bonus depreciation and the Section 179, that may be appropriate for equipment that you buy. For example, if you buy an SUV to tote families around to look at houses, that could certainly play a part in a bonus depreciation scenario. But yeah, when they're talking about cost segregation and 1031, that is not for a real estate agent. That is for somebody who owns property.
All right, give me a second on that. So they didn't answer it.
No, they didn't answer.
So that's the fear.
Yeah.
And you're not even giving them a tough thing yet. This is a pretty easy. A lot of people, Ed, and that's an accountant, can answer this question.
Oh, any tax accountant can answer that question.
Okay, so I'm putting it. All right, so I'm going to go to the next question as I'm trying to go to another large language model. And that is Claude, Anthropic's Claude, and see what their answer is. And I'll go to Grok, which is the paid Grok. I don't have the free version because you can't really use the free version. I could log into someone else's Grok, but I'm just going to go with it.
So my question for you, is there an agent that will feed the same question to all the different large language models so that you can compare and contrast?
Yes, there is. There are. I have to ask my client from Artilla, Dr. Mohammed, more about that. But there are where you have them all built into your coding and all those different things. So you have it loaded in multiple large language models at once instead of going from screen to screen.
That would be dangerous, though, because it would increase the temptation to pick the answer that you like best.
True. Or what you think is right, and it might not be right. Okay, so right now Grok is answering this question too.
Okay.
So we'll see what Grok does. And so I'm all right. Let's go. Okay. So while we're waiting on Anthropic, okay. That makes more sense. Okay. So here it says, at your net income level, you should seriously consider an S corporation, likely your best option. You can pay yourself a reasonable W-2 salary, typically $60,000 to $80,000 for your income level, and take the remaining profit as distributions, which aren't subject to self-employment tax. This could save you $5,000 to $10,000 annually in taxes. An LLC provides liability protection, but taxed at sole proprietorship by default, all income subject to self-employment tax. Sole proprietorship, simplest, but you pay 15.3 self-employment tax on the full 120K and have no liability protection. Financial systems, separate bank accounts, accounting software. So this answers it pretty much the same as ChatGPT did.
But a heck of a lot better than Meta.
Oh, Meta was terrible.
Meta was awful.
We'll
and it
see.
gives me great pleasure to say Meta was terrible.
All right, here, let's see what Grok said. Choose the right business structure. Most sole agents start as sole proprietors, but at your income level, consider upgrading for your protection and potential savings. Sole proprietorship, pros, simple, no filing fees. So look at this. They're just giving you every option, not even advising you. You see how the brains work. LLC often recommended upgrade in its pros, and then it says LLC is S corporation. Form an LLC, then an S corp. Pros: potential big tax savings. Pay yourself a reasonable salary. Take the remaining as distributions at $20K. This could save you $5,000 to $15,000 in taxes. Cons: more compliance, higher setup, accounting costs. Salary must be reasonable. Break even often around $75K to $100K profit. Worth it for you. Recommendation: switch to an LLC. Soon it protects assets and then financial tax organization. What Grok does is give you 65 different options and makes your head spin.
Okay.
No.
Yeah. It laid out, here's the way you make the decision versus what ChatGPT and Claude did, which was go straight to the decision and defend, here's why we make this recommendation, here are the pros and cons. Whereas Grok was going through various pros and cons, and then at the end, a very weak recommendation on the S Corp, but still better than Meta, which just apparently hasn't gotten enough tax questions yet.
Okay, let's go to the next question.
Okay, so let's take something a little more complicated and let's ask ChatGPT to predict the future. I have lots of conversations with clients about how they should save for retirement. The conventional wisdom here in the United States is that you stuff as much money pre-tax into a 401k or SEP or IRA or defined benefit plan. And then when you retire in a lower tax bracket, you pull the money out. So let's tell it I am 40 years old. That sounded a lot better than 60.
Yeah, I'm going to go scenario
I'm 40 years old and looking to save for retirement. Should I choose a pre-tax?
Looking to save. Okay, I'm not a fast typer. Looking to save for retirement. And we'll make sure the question's okay.
Should I choose a traditional 401k with tax deductions up front?
With tax deductions up front.
Or a Roth 401k with no deduction today, but tax-free income coming out.
But tax-free income. Let me make sure I have this question coming out. All right. So it says, scenario, I'm a 40 years old, looking to save for retirement. Should I choose a traditional 401k with tax deductions up front or a Roth 401k with deduction today, but tax-free income coming out? All right.
Now, the reality is this is an unfair question, but I think it'll be fun to see how the different models handle it. There's so much information that we need to know to make that decision. But let's see how confident the large language models are.
And now it's calling me, I put scenario and it still calls me Neil. Thank goodness I'm not throwing this into my current. To mess it up. Okay, so I'm putting that. Let's answer the ChatGPT version and then get your feedback, and then I'll go to the other one. Got it, Neil. At 40 years old, earning around 120K net, this is a great time to make the right call. So it's taking and building from the last thing.
Yeah, it's learned from the last thing. Okay.
Yes.
Which may or may not be right.
Core questions. You're choosing between a traditional 401k, tax deduction now, pay taxes when you withdraw in retirement, a Roth 401k, no tax deduction now, tax-free income in retirement. The right choice depends on tax rate now versus tax rate later and your future income trajectory. At 40 with your income, here's the reality. You're very likely to earn more in your 40s and 50s, have multiple income streams in retirement, real estate investments, maybe business income, be in at least the same or higher tax bracket later. That strongly favors a Roth exposure. My practical recommendation, best of both worlds. Look how it gives a recommendation. ChatGPT goes right to the recommendation. We're not going to go with Google because everyone uses Google. This is really good to show these other models because you can Google and get different information with different advice from different people based on what shows up on Google. Everyone is used to asking questions on Google or YouTube. This is where ChatGPT thinks it's gospel. My practical recommendation, best of both worlds, use a split strategy. Roth 401.
My practical recommendation.
How can they get away with this? When are they going to start hitting OpenAI for doing things like this?
Shruggy emotion. Since people listening on Spotify couldn't see my face, I made the shruggy emotion. My practical recommendation, do both. What a punt. That's like a punter for a fifth place football team.
Yeah, use a split strategy, Roth 401k plus traditional employer contribution. Here's how it usually plays out with solo 401k. Employee contribution Roth, max this first. 2025 limits approximately up to 23,000 under 50, grows tax-free forever. Employer contribution traditional, 20 to 25% of your W-2 salary S corp, tax deduction to the business, lowers current taxes. This creates tax diversification, which is incredibly powerful later. Why is this especially smart for you? At your income level, you're not in a low tax bracket. You can afford to pay some tax now. Roth money gives you no required minimum distributions later, flexibility in retirement withdrawals, protection against future tax increases. When traditional makes more sense, lean heavier traditional only if you expect significantly lower income in retirement, you plan to fully stop working, you need maximum tax relief today for cash flow. Most real estate professionals don't fully stop earning. It's telling us the bottom line what it does. Quick example, let's say you contribute $23K for 20 years. Traditionally, you save taxes now, but owe taxes on withdrawals. Roth, you pay tax now, but withdrawals could be $1 million tax-free. The tax-free status is extremely valuable when combined with rental income or business income later. Bottom line for you, at 40, earning $120K net in real estate, prioritize Roth contributions, use traditional for employer side, and maximum solo 401k first before taxable investing. This gives you current tax relief, long-term tax freedom, and maximum flexibility. Okay. Your take on that while I ask the question for another platform.
It's shruggy emoticon. It didn't give an answer. It said do both. And in fact, there are scenarios where doing both is not smart advice. And part of it is we don't know what tax rates are going to be down the road. So single earning $120,000 a year in the 22% tax bracket, who knows what the top tax bracket or the middle tax brackets are going to be in 35 years when I have to start withdrawing money. ChatGPT didn't give us any of that context about potentially higher tax rates down the road, but common sense, everyone I ask, if I say, do you think we're going to have higher tax rates, the same, or lower tax rates 20 or 30 years down the road when you're pulling money out of your account? Every single person tax rates to go up. And ChatGPT didn't discuss that context. It said you're likely to be in a higher tax bracket, but it didn't say anything about overall tax brackets going up. That to me that's a swing and a miss.
Okay, now let's go to Meta. Can Meta redeem itself?
Let's see what Meta can do.
Honestly, it's one of the, like I said, that's why they're offering it for free. There is no model to charge money on Meta.
Yeah. Well,
so that's what you get, what you pay for. You're 40 and looking to save for retirement. That's a great move. Let's break it down. Traditional 401k versus Roth 401k. Traditional contributions are tax deductible now, reducing your taxable income. You'll pay taxes when you withdraw in retirement. Roth 401k contributions are made with after-tax dollars, so you've already paid income tax. Withdrawals are tax-free in retirement. Considerations, current tax bracket. If you expect to be in a higher tax bracket, say the same thing. Time horizon, you're 40, so you have time for tax-free growth with the Roth. Tax diversification. Consider splitting contributions between both options to hedge against future tax uncertainty.
Okay.
General rule, if you expect tax rates to rise or you'll be in a higher tax bracket in retirement, Roth might be better fit. Consult with your, so interesting. So Meta redeems itself a little bit, didn't it?
Meta redeems itself a little bit. Yeah. Meta gives you the calculation. It doesn't do the calculation for you, but Meta says, here's the question you need to ask. It doesn't answer the question because Meta doesn't know, and ChatGPT doesn't know, and Claude doesn't know, and Grok doesn't know what tax rates are going to be in 2045. But it says, here's the question you need to ask yourself.
And strategy, as you're a strategist, Ed, you have to hedge against certain things in your research and looking at things based on a client, each case-by-case client scenario. We're hardly giving any of the client scenario. We don't know if this person's a divorcee. We don't know if this person is...
My wife who's making $300,000 a year. If we don't tell ChatGPT about that, so why don't you go in, you're in Meta right now. Why don't you say, oh, I forgot my wife makes $300,000. Let's see what Meta says.
My wife makes $300,000 a year as an OnlyFans account.
No, my wife is a physician and she's smarter.
No, I'm just kidding. I forgot my wife makes $30,000 a year as a physician.
300,000.
I put 300,000. I'm sorry.
Yeah, okay.
Okay. All right, going. I'm on the fly. Okay. This is what's great. We just came on the fly today.
Yep.
Okay. So I'm going to say this is where marketing advice, tax advice, unless you have the right information, you're going to get very weak answers. This is the other thing. AI, if you prompt it correctly and you push it to the limit, or you're going to get advice that you could just call your local tax attorney or tax accountant or financial advisor, and they'll answer that question to you in 5 minutes.
Right.
There's a lot more to it. So
there's a lot more to it, and experience really can be more valuable than the AI computing power. Here's the thing. You've mentioned that it's all about the input. It needs to know what it needs to know. If you are a person who has ever said you don't know what you don't know, then don't be asking large language models to do your tax planning for you, because you don't know what you don't know. You don't know what might be important. Oh, wife makes $300,000. And then we can ask what happens if she finally realizes what a louse I am and divorces me in 2 years. We can go into all sorts of scenarios. But I'm curious what Meta says now that it knows that I married out of my league.
Your wife's $300,000 income has $300,000 income as a physician. You're likely looking at a high tax bracket. When deciding between traditional 401k and Roth 401k, consider the following. Tax bracket now versus later. You expect to be in a lower tax bracket in retirement. Traditional 401k might be the way to go. Tax diversification. Splitting contributions between traditional and Roth 401k can provide tax flexibility in retirement. State taxes. If you expect to move to a lower tax state, traditional 401k might save more on state taxes. Strategies for high earning physicians.
That's the first model that mentioned that potential consequence of retiring to a lower tax state. None of the other models discuss that.
Yes. But if we kept prompting it would keep searching. So this is the problem people get is it's just pulling whatever they find on the web first. Okay. If you don't push it to the limit, it's only going to pull what's coming to the web. It's not going to go do deep research and search 25,000 different sites. Grok claims it does. So let's go see what the answer was with Claude. Do we have the answer to Claude or we went back to Meta? So let's go back to Claude.
We skipped ahead to Meta.
Okay. Great question. At 40 with 120K net income, here's how to think about this. Traditional 401ks make sense when your current tax rate is higher than you expect in retirement. You need to reduce taxable income now. Roth 401k makes sense when your current tax rate is lower than you expect in retirement. You want tax-free withdrawals and no required minimum distribution. So again, Claude's right again, but here's the problem with all this. I love the advice. The problem is that you're getting information without giving all the information. That's if you give information to it saying, let it become your doctor, let it become your accountant. You really have to understand the answer before you ask the question.
Yeah,
so that
ChatGPT is always going to tell you you've got contagious death cancer.
I don't know, but I'm just more afraid of ChatGPT because most people who do this do not use but only one large language model. And that's ChatGPT. A big percentage still of users of AI that are new to AI use OpenAI's ChatGPT. They do not know there's a thing called Anthropic Claude, and that's considered one of the best with coding now. And Meta even has AI that you can do ChatGPT, or even there is a thing called Grok. So at that point, and it's funny, they think it's gospel. It's just pulling information from experts on the internet. Right. You have to have it.
I've never used Grok because it's so closely tied to one very controversial individual. And there have been plenty of cases where Elon Musk's political leanings have crept into Grok. So that's why I've never used it. Now, Grok may be a better model. It may do better research. And I just don't know that because I've been turned off by some of the anti-Semitism that comes through if you push Grok, I guess, in that direction.
All right. So this one here at age 40, because we do have another podcast to record as we're finishing up our great recordings so that we can like and subscribe to the podcast. Who would have thought that he is putting his knowledge up against AI? But again, Ed, we should have a question asked, one by AI and one by you in your next questions, like the real difficult ones that you have to answer, and see how screwed up AI would be. All right, so to age 40, deciding between a traditional 401k pre-tax contributions with upfront tax deduction and a 401k after tax contributions with no upfront deduction but tax-free qualified withdrawals in retirement is a common dilemma. The best choice depends on your current thing. So it lays out everything and confuses you, Grok, where it's going to take you at everything that's on the internet. What do you think people who turn to a large language model for advice want?
They don't want a discipline. They want Grok is giving me the discipline. It's saying, here are all the considerations, and it sounds like it's probably doing a very serviceable job, but it's not answering my question. It's helping me answer my question. Now, for some people, that may be what you're looking for. Some people may say, I don't want AI making the final decision. Help me make the decision. And I imagine that's a prompt that large language models get all the time. Help me make this decision, as opposed to tell me what to do.
All right. So we're going to go to a final, give them a real tough question. And let's see if Meta can even handle it. What would you give them as a tough question?
Okay. I want to buy a tiny house as a tax shelter.
I've heard about this. Okay. A tiny house, a tax shelter. Okay.
The tiny house seller is telling me I can deduct $600,000 buying the tiny house, but I know I can get the same tiny house for $120,000 elsewhere. Am I cruising for a bruising?
A tiny house for $120,000 somewhere else. Somewhere else.
Yeah, I don't want to go with
cruising for a bruising. All right, so I'm just going to make sure I want to buy a tiny house as a tax shelter. The tiny seller is telling me I can deduct $600,000 by buying a tiny house, but I know I can get the tiny house for $120,000 somewhere else. Am I cruising for a bruising? All right, let's see. It's searching, so it doesn't know the answer. Sounds like you're looking to get a tiny house as a tax shelter, but I'm not sure if the seller's claims are legit. Let's break it down. The IRS allows deductions on rental income properties, including tiny houses, but there are some rules to follow. You can deduct expenses like maintenance, utilities, and depreciation, but the property must be used for rental income. The seller's claim of $600,000 deduction seems suspicious, especially if you can get the tiny house for $120,000 elsewhere. The IRS has a strict guidelines on depreciation deductions, so it's best to consult a tax professional to ensure you're following the rules. Rental income deductions, depreciation, and that. All right, what are your thoughts on that answer?
It's true, but it's probably not what someone's looking for from the large language model. In this particular case, the tiny home seller doesn't price the property on the cost. They look at the discounted cash flow analysis. They say, okay, we can rent this thing for $100 a night, $3,000 a month, $36,000 a year, $960,000 over the 30-year lifespan of the house. We do a discounted cash flow analysis, and the net present value of that income stream is $600,000. The real question, is that strong enough? Is that a reasonable valuation that the IRS would accept? And some attorneys have written opinion letters saying yes, as long as it's an arm's length transaction from an unrelated third party and you meet all of the other requirements, they feel comfortable with it. Other people don't. So what I've done is I've asked ChatGPT a question that doesn't have an objective answer. And what ChatGPT has told us is, it seems suspicious, consult a tax attorney. That's not a bad answer, but it's not really going into depth into why there may be a problem.
And that's where you get in the weeds, where only a professional like yourself, Ed, that's led through this can figure this out, has gone through this, has lived through it.
Right. Yeah, this is kids don't try this at home.
All right, so guess what ChatGPT, who thinks it is a tax professional, said? Neil, you're right to be suspicious, but your describing has multiple red flags. And yes, this absolutely sounds like you're being misled. You cannot deduct $600,000 by buying a tiny house that cost $120,000. Now, is that true or false, Ed?
We don't know. We don't. It hasn't been audited. It could be that somebody passes at an audit. It could be that the IRS says, no, this is basis inflation. You're inflating the dollar amount that you're deducting, and they cut that deduction down to a more reasonable amount. It possibly, not likely, but possibly could be described as fraudulent by the IRS. So we don't know.
Okay. All right. Everyone needs to go check out Ed. And this is a really interesting podcast. I learned a lot today, and we could throw AI some more monkey wrenches as well. But remember, never get your tax advice as your gospel through ChatGPT or any of these. You have to get all the information that's needed in there. You then have to consult with a professional who knows what the heck they're talking about. Yes, it might know than certain things, but as I've said before, some of it makes it delusional, like you can create something that's impossible to create. Depends on what day that AI agent's ready to answer your question.
Yeah,
exactly.
And it sounds like it depends very much on the precise wording that you use to ask the AI agent.
Okay. All right. That was a special simulcast of the Neil Haley Show on the Lyon Share Podcast, guys.